Namaste, good morning, and welcome to revision session. There are some rules of revision which I will also tell you how, etc. And first, basically, the plan of revision session is first 2 days international taxation. First 2 days international taxation. That is today and tomorrow are international taxation. Today my focus is transfer pricing. Some of our friends want a little elaborate explanation on certain aspects, which I told them I'll do during the course of the after the classrooms, but continuous classes and other commitments I couldn't do. So I thought I'll use revision as an opportunity to do that. So today is transfer pricing. Tomorrow, all other areas like non-resident taxation, DTAA, advanced ruling, and any other small areas. Okay. And again, Wednesday is assessment of companies. Thursday is assessment of firm, assessment of individuals, and Friday miscellaneous areas. So this is my plan of action for the revision. Okay, approximately some 25 hours, but I'll try to save the hours for you. Okay, and one ground rule of revision, which I always follow in revision sessions, which I would like to follow now also, is I will not even ask you one question. I will not even ask you one question. Okay, not even ask you to do one solution also. Nowhere in this process I want to demotivate you, or nowhere in this process I should reduce your confidence. I should only try to increase your confidence. So nowhere I'm going to ask you a question where if you are unable to answer the question, even though I know you are all matured enough to take it, but you should not feel little underconfident at any point of time. So revisions will never have something like work out this question or work out this. Okay, so that part of it I'll assure you, and it's a separate material for revision. The only intention of this material is once you are through with the revision sessions, on that one day, whatever is the remaining time, whenever you want, you can browse through this material, which will be comprehensively sufficient to cover the syllabus. And whenever you are taking up the examination day, that is between the previous day of examination and this day of examination, you have in between some 20 hours or 18 hours. Okay, so in that whatever 10 hours you are going to prepare, this revision material should help you prepare. These are all the motivated rules of providing you revision aspects, etc. Okay, and today this is going to be the revision material for your international taxation. For your international taxation, this is going to be your revision material. Okay, and it is there in the group, and for those who are coming to the class, they can pick a copy of the material. Those who are coming for the class, others you can pick it up from your group. Without wasting any further time, without without wasting any other aspects, let us go into day one of the revision, where my focus is transfer pricing. My dear friends, remember, if there is going to be approximately, let us take 30 to 40 marks of international taxation. Okay, our friends tell me that it is close to 40 marks. Okay, we can easily crack that 30 to 35 marks without any doubt. We can easily crack, so that the other 30 marks becomes much more simpler. I am only looking at not scoring an exemption, clearing the group 1 with the top of tax, with the tax marks being the top marks, or clearing the entire paper with very, if at all there is any shortfall in any other subject, tax should compensate. These are all my intentions. So in our classroom session, when I look at transfer pricing as from our examination perspective, when I look at transfer pricing from our examination perspective, okay, one is ALP related question. One is ALP related question. Another is this limitation of interest. Okay, limitation of interest. This 94B, which restricts to 30% of EBI TDA. My dear friends, from the examination perspective, whatever I am seeing is, this is something very mandatorily they are asking. This is something mandatorily that is being asked repeatedly in the examination. So, limitation of interest under section 94B. Though this is also ALP, this NJA related questions are also there. This notified jurisdictional area related questions are also being asked in our examination. That is also a part of ALP only. But there we have to write that extra answer of they need not be associated enterprises, etc. since it is located in that NJA. And the last preference only for this administrative provisions of 94D, where you need to maintain what type of documents, etc., are all only coming in the last aspects. Whenever I am speaking about ALP, I am speaking about ALP from the two perspective of both the primary adjustment, which is what we have to find out, and secondary adjustment, which will have an impact on the interest, on the impact on the inflow of money or the additional tax that needs to be paid. So this is how my coverage of transfer pricing is going to be. This is how in the revision my coverage of transfer price is going to be on these aspects. But before any of these things, our friends are always asking me this doubt on primary adjustments. Sir, what is this functional difference? We are unable to exactly follow the functional difference, especially in the case of the two popular methods, that is resale price method and cost plus method. Okay, many of the two of our friends have been repeatedly asking me, and there are a couple of other friends also who was. So I understood that this might be the problem of our people, of all our students also. So let us have a standalone discussion on this adjustments. Let us have a standalone discussion on this adjustment, because I'm very sure if it is going to be TNMM, it's very straightforward. I have to export for $3. I have exported for $2. That's a standalone, straightforward transaction net margin method. So where is the problem? The problem is coming in the terms of the other methods. Okay. So let me have a detailed discussion on that. That's why I said TP alone, I'm not going on the revision mode, exclusively revision mode. No, TP alone, it is like beyond revision, I'm also going to comprehend. I thought in this process of 15 days after completion of the classes, I will keep typing some, I will work out some things and send you, but that couldn't happen because I'm not a person who will sit at home and do it. Then I thought I asked a couple of our friends to be there. Whenever I am possible, I'll teach also, but that also didn't happen. So I thought, let me take this as an opportunity. Various methods and treatment of adjustments in various methods. What is this methods? What are all the adjustments that needs to be? How this needs to be countered? First, comparative uncontrolled price method. First is comparative uncontrolled price method. My dear friends, okay, the first method is, okay, comparative, okay, uncontrolled price method. Okay, uncontrolled price method, comparative uncontrolled price method. That is, it is a, for all aspects, CUP is the basic. Let us understand, cup is not an exclusively for cup method alone. Even while doing resale price method, we will take an uncontrolled party as an example or as the base and work out the arm's length price. Even when I am working out the cost plus method, I am going to take an uncontrolled enterprises profit percentage and revise the profit percentage accordingly. So cup is a common method, but there is an exclusive method called cup. There is an exclusive method called cup, which majority of the times is used for sale. Majority of the time it is used for sale of goods, though cost plus method is more detailed method, but cup can also be used. So in this aspect, I want to tell you that there is an associated enterprise. There is an, is there a question from any one of you? Yeah, the point that I was telling, that in revision classes I never ask question, doesn't mean you should not ask. Okay, you can ask me any questions. Okay, be free to ask, but it's only that I don't ask questions during revision classes. And no homework during revision classes. Okay, associated enterprise and then independent enterprise. Associated enterprise and then independent enterprise. Normally, whatever is the independent enterprise sale price, let us take this as sale price, should be the same sale price with regard to associated enterprise. Should be the same sale price for associated. The fundamental logic upon this system, cup method is misbuilt is, boss, if I am selling to an external person, at the same price, sell it to my associate enterprise also. Okay, and I am again going with the fundamental logic. The logic is very simple. From the Indian income tax angle, okay, I am not here to lose revenue. Okay, whatever might be the circumstances, I am here to protect my revenue, my country's revenue. The assessing officer's duty is to protect our country's revenue. So, my dear friends, the whole logic is the sale price should be the same. The sale price should be the same. That's all I require. Okay, but there can be functional differences. There can be functional differences. My dear friends, my manufacturing cost comes to 10,000 rupees. My manufacturing cost comes to 10,000 rupees. Okay. I am exporting the goods. I am exporting the goods for which I need to pay freight 3,000, insurance 1,000. For example, I am saying freight 3,000, insurance 1,000. In this case, I am not paying, which means my customer is going to pay. My customer is going to pay. So technically, we call this as FOB and we call this as CIF. I can call that FOB as COB also. Actually, I am sending it at cost. Whereas the other person, in the case of an independent party, I am incurring insurance and freight. I am incurring insurance and freight. To find out my associated enterprises value, if I take my independent entity's value, I should reduce insurance and freight. I should reduce insurance and freight. The fundamental logic is I can only compare apple to apple. I can only compare apple to apple. Suppose here you can understand this comes to 14,000. Here you can understand this comes to 10,000. Okay. Now that is the cost. My export value, that is my sale value, here is 17,000. My sale value here is 17,000 and here is 11,000. And here it is 11,000. Boss, I can understand the difference up to rupees 4,000 because I understand. The difference can be, the difference between these two can be 4,000 because in the first case, you are bearing it. So to that extent, you have to increase your sale price. Whereas in the other case, he is bearing it. So the difference can be 4,000. So minus 4,000. Boss, you should have at least exported for this money. But whereas you are only exporting for this money, I'm not saying there is no profit. Your cost is only 10,000. You are selling for 11,000. Your profit is 1,000, but not the profit you would have regularly earned. But not the profit you would have regularly earned. You are reducing the profit, which means what should have been. So I am saying apply this here. My ALP becomes this, and you need to apply that in my regular working. Repeating, my dear friends. What is CIF? What is FOB? CIF means cost, insurance, freight. Insurance and freight, who is bearing? In both the cases, customer, no problem. No adjustments. Directly I can compare and see. In both the cases, me, no problem. No adjustment. Directly I can compare and see. In one case, customer. In one case, me. That is where I need to go in for some adjustment. That is where I need to go in for some adjustment. What is the nature of adjustments I should go in? Who bears? In the case of an independent party, he bears. I take his price, reduce that to find out my FOB value. I will work out the reverse way. Here 10,000. Here 2,000. That is freight. And then there is an insurance of another 2,000. So 14,000 with my AE. Here 10,000 dash 10,000, and I have exported it for 14,000, whereas here I am exporting for 16,000. Boss, wait. Here you have made a profit of 4,000. Here you are only making a profit of 2,000. I am not accepting that. I am not here. If I take this 14,000 as my value, these things should be added. In the previous case, I reduced. Independent party bearing it, so I reduced. Here for associated enterprise, it is CIF. For independent party, it is FOB. So to find out CIF, to find out what should be CIF, I should add insurance. So I take 14,000, add 4,000. So the price at which it is should have been exported is 18,000, whereas you are exporting only at 16,000. So 2,000 rupees you should add it. 2,000 rupees you should add it. My ALP is 18,000. My ALP is 18,000. So the first type of adjustment is FOB versus CIF. FOB means without including insurance and freight. We call it as goods on board, freight on board, whatever it is. Okay, depending upon who bears the insurance and freight, can you pass the material to her? Depending upon who bears the insurance and freight, it varies. Whereas CIF is cost, insurance, freight, which needs to be adjusted. Is the class clear in this? Are we clear in this? In the case of cup, what should I do with CIF? What is CIF? This is logic. This is not a tax. If you look at it from the taxation perspective only, you will lose the entire, in what tax? First find out logically, what is the price I should have sold it to my associated enterprise. If you go by logics, if you close your eyes for a minute and just comparatively see, am I losing or not? You will find the answer than to go from the tax perspective or blind perspective of addition deletion. Am I clear to you? Next comes a popular term called quantity discount. My dear friends, my independent party, I have sold 10,000 units. For my associate enterprises, I am selling 1 lakh units. Obviously, a bulk purchaser will get the benefit. Obviously, a bulk purchaser should be given benefit. So let us take that a quantity discount of 10% is offered to associated enterprise. So a quantity discount of 10% is offered means, yes sir, in this 10% I can reduce 1,800. So your selling price, if it is 16,200, fine with me. But if it is 16,000, I am not okay with it. I'm not okay with it. A quantity discount might be offered. Okay, a quantity discount might, if I am taking the independent party as the basis, reduce quantity discount. If I am okay, what I am offering to associated enterprises, I am not offering to independent party, but it is right. Because you can see right from the examples, okay, that he is purchasing in bulk quantity. For him, giving discount is correct only. So from my independent party, reduce quantity discount to find out the ALP of associated enterprise. Then check what it is. Quantity discount should be reduced from the independent party. Always it will be so only. So quantity discount should be reduced. Quantity discount should be reduced. Is the class so far clear? Okay, right. My dear friends, what is warranty or guarantee charges? Okay, let us understand it fundamentally. That's why I said even today might not, the initial discussion might not look like a revision. I don't mind, but I'm very much worried about you understanding the concept. Okay, if I sell 100 vehicles, there is all possibility one vehicle I need to replace, because 1% is a normal loss for me. Your costing terminology says this as a normal loss, which I will load it in my 99 vehicles cost. So let's not worry about it. So there is a possibility that 1% will be lost. There are two people, associated enterprises, independent enterprises. Okay, for associated enterprises, I say, boss, I give you guarantee, which means if any vehicle is not working, send it back to me. Okay, For my independent enterprise, no guarantee. Which means it is not that for customer they are not giving guarantee. Otherwise, my vehicle will not sell. For the customer, guarantee is there. Who is bearing the risk? In the case of sales to my associated enterprises, I am bearing the risk. In the case of sale to my independent enterprises, he is bearing the risk. What he will say, boss, reduce my cost. Reduce my cost to that extent. Reduce my cost to that extent, so that now to find out the associated enterprises cost, I should add it. Suppose the reverse is the case. In the case of associated enterprises, no guarantee. Whereas in the case of independent enterprises, there is guarantee. Always remember one thing. Wherever there is no guarantee, price has to be lesser. Because he bears no guarantee does not mean all the goods are good. No. He bears, the risk is borne by the other person. Wherever I am giving guarantee, the risk is borne by me. So this can also be a functional difference, because of which the price might be reduced or increased. Because of which the price might be reduced or increased. And my dear friends, this guarantee and all alone, guarantee, interest, credit period, all these things, look for number of months also for your safe purposes. There can be in both the cases guarantee, but here it is 6 months, here it is 1 year. The difference of 6 months, which will be very much evident in the question. Guarantee is 1% of the cost into 6/12. Either addition or deletion. It depends upon who bears the risk. It depends upon who bears the risk. Okay, like that, it will be very, 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 very evident. What is the guarantee charges will be very much evident, so that you can find it out. And I am repeating this point again for your understanding, my dear friends. You should. Is there a doubt? Selva Ganesh, if there is no doubt, please.
Sir,
I thought
sir, okay. Sorry, sir. If there is no guarantee for AE, then what? So we need to add the guarantee in AE, right?
it depends upon
Minus the
factors.
guarantee.
Okay. AE, independent party, independent enterprises. AE, independent enterprises. No guarantee. Guarantee provided. Okay. No guarantee does not mean the customers are losing. No guarantee means risk is undertaken by AE. Risk is undertaken by AE. So, if I am selling for an independent party for 50,000 rupees, and there is a 1% chance of guarantee. Guarantee is 1%. For independent party, I can only sell for 49,500, because boss, that 500 he is bearing. He is bearing that 500. Not that it is not at all there. Not that because otherwise no product will sell. If I am going for a car showroom, if they say this car is a 1 year guarantee, the other car is no guarantee, I will always prefer the first car, because there is guarantee. 6 service free, 3 service free. I will pick 6 service free car. The reason is very simple. For the customer, there should be a level playing field. So let's forget the customer for a minute. If independent who is bearing the guarantee, the risk is on the associated enterprises, means from the independent party's price, reduce the guarantee charges. Reduce the guarantee charges. Okay, so this is how, these are all the popular three adjustments in the case of the cup environment. These are all the popular adjustments in the case of cup environment. Is the class clear? Is the class clear? Okay, are we on the same page? Okay, what type? Look for to whom CIF, to whom FOB. Insurance and freight, who is bearing. FOB stands for without any additional cost. அப்படியே ஏத்தி அனுப்பிச்சிடுறேன். He will take care of the freight and insurance. இல்ல, I will pay the freight, I will pay the insurance. Obviously, I have to collect from you. Who you are might be independent party, might be. Look at it logically. Look at it logically. You will hit at the point. You will hit at the point. Is there any doubt in this cup? Please ask me. If there is any doubt in the cup, please ask me. Your silence, I will take it as positive. Okay, I will take it as either you have understood or இது எப்படியும் புரியாது. Okay, whichever way you have, your silence goes, I go with that. And now for the method that is always getting into challenging mode, resale price method. Resale price method. In this, how adjustments should be done. Before that, let me also have a small understanding of a resale price method. This is for import of goods. This is for import of goods. We are clear? This is for import of goods. In import of goods, what should I ensure? I am not paying, okay, my purchase price, that is import price, is not more, because purchase price is my cost. It is affecting the debit side of my P&L account or trading account. So my purchase price should not be more. The whole point here is to ensure that my purchase price is in line with, okay, the independent party. So my dear friends, let me go into resale price method. Okay, from the associated enterprises, from the independent party, I am purchasing for 15,000. Here it is 14,000. No adjustments, my dear friend. Forget for some time there is any adjustment. I have purchased for 15,000 from my associated enterprises. Whereas if I have purchased from my independent party, it would have only been 14,000. It would have only been 14,000. Okay. When it is available for 14,000, remember, this is an expenditure. This purchase is an expenditure. When it is available for 14,000, why will I ever pay 15,000? Why will I ever pay 15,000? That means 1,000 rupees my profit has been shifted. Okay. Now the law says 1,000 into number of units will be my increase of income. Fundamental logic. Fundamental logic. Okay. Okay, na? I can purchase from you for 14,000. Why will I purchase from Srivel for 15,000? Unless Srivel is known to me, unless I want to benefit Srivel, I cannot purchase for 15,000 when it is available for 14,000. The law says if you want to benefit Srivel, that is between you both, but pay me the tax. Why should I lose my tax? Do you understand? Fundamental logic. No other adjustment. The independent party's purchase price should be the purchase price of associated enterprises also. If it is purchased for more, boss, I am not happy. Okay. The other way, always in TP, I have told you, if I purchased from 12,000 from AE, income tax department will fold their hands and say, thank you, boss. Okay. Yeah, you could have purchased for, you're purchasing only for 12,000. That's fine. So ALP adjustment is only favorable to the department, not favorable to the assessee. It can only be a revenue friendly aspect of it. So let us not worry about this. Okay. So coming back to the original example, 14,000, 15,000. Friends, in the previous example I gave you, I was talking about insurance and freight. In the previous example I gave you, I am talking about insurance and freight. Let us take, in the case of independent enterprises, he sends me on FOB, which means I should bear insurance and freight, which comes to 500 rupees. Which comes to 500 rupees. Now go slow on this. Which comes to 500 rupees. Which means my purchase price is 14,500. Purchases according to our accountancy includes all direct expenses, carriage inward, the fundamental concept which we studied in our 11th standard. Carriage inward should be added to the cost of the stock. Okay, so 14,500, whereas here I am purchasing for 15,000. Difference is 500 into number of units. Number of units. There is two ways of doing this, my dear friends. I can add 14,000 plus 500, or I can reduce 15,000 minus 500. In which case it will be 14,500 and 14,000. Anyhow, the difference is 500. Logically, which you are taking will determine what it is. Logically, always we will take the independent party. Logically, we will take the independent party. Are you understanding this? Are you understanding this? Suppose in the case of associated enterprises, I am bearing insurance and freight 500, boss. Already I am paying 15,000 for the goods. Here I am paying 14,000. Apart from that, what you are doing? 500 rupees you are incurring here as freight and insurance, whereas here nothing is being incurred because he is sending it as FOB, he is sending it as CIF. Wait, here now my cost comes to 15,500, whereas here it is 14,000. The difference of 1,500 into number of units. Anna, this is easy when I look at it. But we always take the independent party into function. So what we will do is 14,000 minus 500, 13,500 as compared to 15,000. Now only we get a confusion. Sir, எதுக்கு சார் மைனஸ் பண்ணீங்க? ஏன்னா நம்ம ஒன்னு புரிஞ்சுக்கணும், யாரோட ஆங்கிள். ஏன்னா we always take independent party as the basis. Independent party sold me the goods for 14,000 rupees, whereas my associated enterprise sells it for 15,000. Additionally, I am going to incur 500 rupees. Additionally, I am going to incur 500 rupees, which I am not incurring for independent party. Difference is 1,500. Logically, you understand the difference. Logically, the difference is 500. That is, if I can add it here. In this case, you are very comfortable. When I added 14,000 plus there is an insurance and freight of 500, 14,500, 15,500. Okay. Suppose I'm incurring 15,500. You understood easily. But when I'm decreasing from 14,000, you get a confusion. Is the 14,000 reduced to 13,500? No, sir. That 14,000 is 14,000. I'm just finding out what is the ALP, differential price, at which it needs to be input. Still, the difference is only 1,500 into number of units. But the way in which we work out is what is making the difference. Once more from the top. My dear friends, if I take the independent party and an associated enterprise, independent party incurs freight and insurance, whereas associated enterprises is the, so let me work the other way now. Associated enterprises, in the case of import from associated enterprises, okay, I am going to bear the freight and insurance. In the case of independent party, he is bearing the freight and insurance. So whatever is the import value, goods value, plus freight and insurance, or that if they have included and given it directly, compare and see. No other adjustment you need to make. In reverse case, in the case of associated enterprises, I am bearing the insurance and freight. Now, my import price includes that, whereas in the case of FOB, it does not include. That means I should reduce. I should reduce from my independent parties. I should reduce. That is what is this first thing of FOB value versus CIF value. Is the class clear? Is the class clear? Okay, right. Let me go back again. And see something. Sir, he has bought only 10,000 units, but he is buying 1 lakh units. Is it natural to give him discount? Is it natural to give him discount? Yes. I am purchasing from independent unit 10,000 units. From my associated enterprises, I am purchasing 1 lakh units. Is it natural that I should enjoy a discount? Is it natural that I should enjoy a discount? But there you are able to understand. I am selling to him 10,000 units. I am selling to Srivel 1 lakh units. You said, yes, sir. You should give discount to Srivel. Very natural, because he is buying in bulk quantity. That helps you a lot to grow your business. You should give. I am reversing it now. I am purchasing from him 10,000 units. I am purchasing from Srivel 1 lakh unit. Is it natural for Srivel to give me discount? Yes. Srivel has to give me discount. So if I take my independent party as the basis, I should reduce the discount also to find out the purchase price from Srivel. If I take the independent party as the basis, because it is natural, I should enjoy the discount. It is natural, sir. There can be this discount can be 0, 10%. There can be also another side. See, our friend is giving me 200 rupees discount, whereas Srivel should give me 1,000 rupees as discount. So, if I take his price as the basis, my ALP should be less by 800 rupees. He is already giving me 200 rupees as discount. He is already giving me 200 rupees as discount and giving me at 14,000. Srivel should give me for 13,200. If I am importing from Srivel for 15,000, 1,800 rupees I will add back. Because, boss, very simple, boss. Very, very simple. He is not offering me discount. Our friend should offer me more discount. So when I take the independent party, I should reduce the discount. I should reduce the discount. Friends, online friends, in the classroom, anywhere you are not happy, anywhere you are confused, to stop me. I will work out once more also and tell you. But understand, I'm not teaching you anything with tax now. I'm just teaching you a logic of ALP. ALP is not, we are seeing
Can you
ALP
repeat
as a
that point
tax
again?
concept and getting confused. Tax concept comes last. Once I determine the price, how much I get lost. Yeah. Somebody has unmuted. Please ask me.
Can you repeat that point again, sir?
Which one? That is discount point of view. Huh?
Yes, sir. Yes, yes.
Yes, I can explain. Okay. Let us take my associated enterprises independent party. I have purchased from my associate enterprise for 14,000 rupees. I have purchased from independent party 14,000 rupees. No other adjustment. No other adjustment. No, nothing happens. Okay, you can go around. But the question says, he provides me a quantity discount of 1,000 rupees per unit, whereas he provides me a quantity discount of nil. Then technically this means I should have purchased from him only for 13,000 rupees, because he is supposed to give me discount of 1,000 rupees. He cannot say after giving 1,000 only it is 14,000. Why will I buy it from you? If you are saying you are giving a quantity discount of 1,000 rupees, then I should have purchased from you only for 13,000 rupees. Okay, but in our working, we will always take the independent party and say, boss, this should be my import price, but I have imported it for 14,000, so 1,000 rupees I extra paid. Let me give you an example. He offers me a quantity discount of 200 rupees. Will I now reduce 800? How much I should reduce? So will I reduce 1,000? No, I should only reduce 800. So 13,200 and 14,800. So quantity discount should be reduced. If AE is giving me quantity discount, if the AE says, okay, that they are giving me quantity discount, boss, you should actually reduce it from the independent party and find out. Whoever asked me doubt, are you clear with this?
Yes, sir. Yes, sir.
Okay, logic. But don't even look at it from accountancy or income tax perspective. First, logical into number of units is what your tax purposes. So quantity discount, warranty and guarantee charges. Warranty and guarantee charges. Again, risk who is bearing. For the customer, warranty has to be given. The customer will not accept the goods without warranty or guarantee. Who is taking the risk? Associated enterprises is taking the risk. No adjustment needs to be made. No adjustment needs to be made. I am taking the risk. I will ask associated enterprise, reduce the value and give me. Reduce the value and give me. Let me first go to a ground level example. Okay, nothing to do with transfer pricing, but I will give you an example. Okay, I am going and okay, as a customer, I am going in for a television set of 15,000 rupees. One person is not giving any guarantee. Another person is giving 1 year guarantee. Always as a customer, I will prefer this. Always as a customer, I will prefer this. When will I prefer this? If it is 14,000. Then yes, boss. 1 yearல என்ன ஆயிட போகுது? I will take the risk. Customer takes the risk. When will customer take the risk? If the prices are less, you think from your angle. You will take the risk only when the prices are lesser. Only when the prices are lesser. Now apply this concept for a globally in a transaction. Boss, I am an Indian entity. I am an Indian company. I can purchase from my associated enterprises or independent party. My independent party gives me 1 year guarantee. My independent party gives me a 1 year guarantee. My associated enterprises will not give. I am taking risk. In the previous example I gave you, customer took the risk. I am taking the risk. When will I take the risk? Where if my import cost is lesser, I am ready to take that risk. So if I take this as the basis to find out this, I need to minus my warranty charges so that I will find out my import cost. So that I will find out my import. Then only I will do it. If I am giving 6 months guarantee here, into 6/12, I should reduce. If I am giving 3 months guarantee here, into 9/12, I will do. Simple logic. If I ask you, if I have taught you how to add, you would have done it. But that is not the way we do it. We find out the ALP. Always cup is the basis. Always cup is the basis. Under cup, we always take the independent party and work out the AE's ALP. We always find out that. So when I take the independent party, guarantee differences should be reduced. Sir, I will give you one other example, sir. Here I get 1 year guarantee. Here I get no guarantee. Independent party price plus guarantee charges will be my import price. Independent guarantee price plus my associated enterprise will get from me because he is taking the risk. He is taking the risk plus my guarantee charges will be my import price. Okay. Always when you take the independent, for a minute think what is happening. That will lead you to the answer. That will lead you. This is logic and nothing to do with you are now. Okay. For a minute, keep down your pen. Look into from your perspective. You will get the answer within no time. Within no time. Okay. So this is what is warranty and guarantee charges. Markup. Many questions use this term, which immediately makes it jittery. Okay. Let me for a minute think about associated enterprise, independent party. Cost 20,000. 20,000. Add profit 10%. 2,000. 22,000. This is known as markup. Markup is nothing but the profit percentage. Okay. Markup in the case of associated enterprises comes to 15%. Why will I buy from associated enterprise? Why should I buy from associated enterprise? My other party is selling to me at 10% markup, whereas my associated enterprise is selling to me by 15% markup. No, boss. This is not arm's length price. Okay. Now, how to work it out? If they take 23,000 as the basis, I understand this is 115%. What should be 110%? 22,000. So 1,000 rupees into number of units. This is very easy. But whereas always I take the independent entities markup, here I can directly find what is the difference into number of units. In many questions, to find out this markup, we should do a working. Both in cost plus method, this is all the more popular. To find out what is my gross profit percentage of the independent enterprise, I need to work direct cost, indirect tax, indirect cost, interest cost, service cost, sale price. This is it, the difference. So markup is so much. Markup as a percentage is so much. None of the information will be hidden from you. It will be there. Markup is nothing but profit. And associated enterprises should not make more profit than an independent enterprise. This is what is the concept of markup. Is it clear to you? Is it clear to you? So markup and example of markup. Post import cost. Okay. From my associated enterprise, I am importing 15,000. Indian expenses, 1,000 rupees is there. Whereas here it is not there. Okay. So here my cost comes to 16,000. My sale comes to 17,000. What you will say? Sir, sale is also the same. Purchase price is also the same. Why should there be adjustments, sir? Because there is a expense which I am incurring after importing. There is an expenditure which I am incurring after importing, which I am not incurring in the case of my independent enterprises. So when I take this 15,000 as the basis, I reduce 1,000 rupees and say, boss, your import price should only be 14,000. Or when I take 17,000 as my sale value, less profit 2,000, less post import cost 1,000. So I say 14,000 should be my import price, whereas I have imported it for 15,000, 1,000 into number of units. Any doubts? Any doubts? Any doubts? Suppose if I say here it is 1,000, here it is 300, what will you do? What will you do? The adjustment will not be 1,000 rupees. The adjustment will only be 700. So it can be post import cost, or it can also be differential cost. It can also be differential cost. In one of the questions in the classroom, we would have studied customs duty of 200 and a freight of 1,500 is incurred in the case of goods imported from AE, whereas it is only 200 in the case of independent enterprise. Our adjustment will be to the extent of the difference. Our adjustments will be to the extent of the difference. Am I clear to you? Am I clear to you? My dear friends, this is very popular. Reputation cost. Okay. If I import from my independent enterprises, I should incur advertisement cost so that I am able to sell it, because their products are not popular. Whereas when I enter from my associated enterprises, I can directly sell it because their products are popular. When I import Vivo, OnePlus 2 or any of the mobiles, I should incur a huge advertisement cost. Whereas when I import Apple, or when I import Samsung, already they are very popular brands. This AE will say, boss, you are not going to incur this cost. Why? Because we have incurred it. To make our brand popular, we have incurred it. So, when you look at from the independent party's perspective, minus reputation cost of reputation, okay, which I need not incur in the case of associated enterprises, which I need not incur in the case of associated enterprise. So, if I am given a resale price method question, I take the independent party as the basis minus extra quantity discount. Okay, extra quantity minus profit. Normally profit first we will reduce. Extra quantity discount, extra post importation cost, extra reputation cost, okay, or extra warranty charges. All these things should be reduced to find out the price from which I should have imported from my associated enterprise. The price at which I should be imported from my associated enterprise. Is the class clear? Is the class completely clear? This is how we are working on the various aspects. Okay, please remember, associated enterprises cost higher, this is lower. Okay, the reverse will keep happening. Sometimes we will add. Why are we adding is, in these cases, the additions should be made. Logically think, you will hit at the answer instead of looking it from the taxation angle. Am I clear to you? Okay, is the resale price method clear to you, my dear friends? Is the resale price method clear to you? Once more I can see. Yes, friends.
Sir, for an independent entity, post import cost is 1,000. And for associated entity, the post import cost is 300, which means the 700 need to reduce.
Yes.
Okay,
No,
sir.
no. Once more, you repeat me your example.
For associated enterprise, 300 is the import cost.
In India, you are incurring this, right?
Yes, sir. Post import is 300.
Yeah.
And for independent entity, it is 1,000.
Okay.
Okay, so now this 700 is the extent of cost which I should have incurred, but it is not
It
incurred. So
is
on
being
700
incurred by
reduce.
AE.
Ah,
It is being incurred by AE. Suppose
yes.
here my import cost is 16,000 and I am incurring 1,000 rupees. My expenses is 17,000.
Okay,
If I
sir.
reduce 17,000 minus 300, my import with the associated enterprises should be 16,700. 16,700. Then no problem. Both will come to 17,000. Suppose I imported here for 17,000. I am wrong. After importing for 17,000, I am also incurring for another 300 rupees. So my purchase price is 17,300. Whereas if I have imported for 16,000 and added 1,000 rupees, there it would have been only 17,000. So my ALP is 16,700. Now compare what is the actual import price to understand whether it is within ALP or not. Is it clear, Janani?
Okay, sir. Yes, sir.
Okay, friends. Okay, you're confident about this entire aspect. Please remember, take the independent party minus additional quantity. Can you write down, please? Resale price method, how to find out ALP. Resale price method, how to find out ALP. Okay, sale value, sale value, some amount, less normal GP. Less normal GP. Other things being constant, this should be my purchase price. Less additional discount. It can be 0 to 1000, or it can be 300,000, which means 700 should be reduced. 500,000, 500 only should be reduced. Additional discount given by AE. Additional discount given by AE. Less extra post importation cost, less extra post importation cost incurred in the case of AE goods. Extra post importation cost incurred in the case of AE goods. Less warranty and guarantee charges, warranty and guarantee charges where AE's period is lesser than independent party. Where AE's period is lesser than independent party. Where AE's period is lesser than independent party. Less reputation cost of AE goods. If AE goods are more reputed. I'm not saying all this will come, but this is what. Reputation cost of AE goods. Pakka clear? Pakka clear, friends? Okay. Any other adjustment suddenly comes also. For a minute, keep down the pen. Just to do a rough calculation, you will know what to do. You will know what to do. Import price should not be more. That is the logic in which you have to work. Okay. Now I go for the cost plus method. Now I go for the cost plus method. Okay. On what will the adjustments be made? On gross profit percentage. All adjustments in cost plus method will not be made on price, will not be made on sale value, but it will be made on gross profit percentage. Gross profit percentage. Okay. So for this, under cost plus method, okay, under cost plus method, my dear friends, under cost plus method, what I should find out is, for an independent party, what is my GP percentage? Same should be for AE. Same should be for AE. Okay, ma? For my independent party, whatever is the gross profit percentage, the same I should have earned with my AE. Other things being constant. Okay. Other things being constant. Suppose, okay, in the case of independent party, okay, 600 hours of working into 1000 rupees per hour makes it 6 lakhs. I add profit of 4 lakhs. I make it as 10 lakhs. Okay. My sale price is 10 lakhs. Here also 10 lakhs. Immediately don't say everything is correct, sir. No. Here the profit is 40%. Probably here the cost is 7 lakhs and my profit is only 3 lakhs, which means my profit is only 30%. Now I am getting a doubt. No, boss? You should have earned 40%. You should have earned 40%. 10 lakhs is not my comparison point. Percentage of profit. Why are you doing this work when you are getting a lesser profit when you can make a more profit with an independent entity? So here my comparison is profit percentile. So this is 60% means what is 40%? I will find out. This is what is the holistic point. This is what is the holistic point. This is what is my holistic point. Now I am taking a little, please concentrate. So let me start with the same example. Associated enterprise, independent party. Okay, he incurred 6 lakhs. I made 4 lakhs and earned 10 lakhs. Okay, now 40% is my profit. In the case of my independent enterprise, to do his work, I have to purchase a software, my dear friends. To do his work, I have to purchase a software, which costed me 1 lakh. Whereas AE gave me that software. Associated enterprise says, boss, you keep this software. Now asking me to earn 40% is wrong. Don't look at the cost of 1 lakh. Oh, so my profit can go down by 10%. 1 lakh on 10 lakh is 10%. My profit can go down by 10%. Why? Because boss, he has given me the software itself. Technical know-how in the case of associated enterprises is provided by the associated enterprise, whereas in the case of independent party, it is incurred by me. The cost of technical know-how can be taken as 10% of GP, boss. Reduce 10%. I'm just saying 10 into 40, it should be 4. I'm just saying. Okay. The reason he gives order for processing of 1 lakh data. Associated enterprises gives me order for processing 10 lakh data. Boss, discount kudunga, boss. Normally, he is giving me more business. You cannot compare. It is not apples to apple. This discount can be 5% of GP. So, if I am earning 40% with an AE, less 4% for my technical know-how, less 2% for my discount. Always you should remember, plus if more credit period is given. Very carefully read it. Suppose AE's credit period is less, that also less. If AE gives more, if I am giving him 3 months credit, if I am giving him 1 month credit plus credit period, whereas reverse minus credit period. Minus credit period also. Okay, like that. Marketing expenses, etc. will make it happen. My dear friends, take the GP. Providing know-how or other benefits by AE minus. Idan the software. Providing discount by AV minus. Credit period either plus or minus. Majority of the cases they are only saying plus. Okay, right? Additional cost which is not forming part of direct or indirect cost. Find out the percentage. The marketing expenses comes to 1 lakh. 1 lakh of 40 lakhs comes to 4%, like that, and we will find out the cost plus method. We'll find out the GP, apply the GP on the direct cost to find out what is the profit. Any doubts, please ask me. Any doubts you have, you ask me.
சார் இப்போ சாஃப்ட்வேர் காஸ்ட் வந்து ஏஇ வந்து நம்மளுக்கு வந்து கொடுக்கல, அதாவது இண்டிபெண்டன்ட் என்டர்பிரைஸ் வந்து காஸ்ட் இருக்கு, ஏஇல இல்லைன்னா நம்ம ஏன் சார் வந்து மைனஸ் பண்ணணும்?
ஆட் தானப்பா பண்ணோம். அப்போ ஏஇ கொடுக்கறாங்க, இண்டிபெண்டன்ட் என்டிட்டி கொடுக்கல, அப்பனா மைனஸ். இண்டிபெண்டன்ட் என்டிட்டி கொடுக்கறாங்க, ஏஇ கொடுக்கலனா பிளஸ்.
ஓகே சார்.
கரெக்டா ராஜா?
ஓகே சார்.
Okay friends, okay, so cost plus method, let's do the same thing. Cost plus method.
Sir,
Yes,
excuse me, sir.
yeah,
Sir, more period of guarantee provided by AE, na we should plus
more period
credit
of,
period.
in which method you are asking?
Cost plus method.
Cost plus method. So here I am the seller. Let us now understand. I am a seller. Let's go by the logic. For AE, I am giving 1 year guarantee. For independent entity, I am giving 6 months guarantee. So risk is more for me. Risk is more for me. From here, I should add my GP percentile. I should add my GP percentage. Only if I earn more profit, I can bear this risk. Whereas reverse is the case. 6 months, 1 year. I should reduce because he is taking more risk. That is what is the logic, friend.
Okay, sir. Thanks.
Okay. Let's cost plus method. Identify the GP of independent entity. Identify the GP of independent entity. Less any facilities provided by AE. It can be technical know-how, it can be software, it can be patent. Any facility provided by AE. Any discount naturally provided to AE. Any discount naturally provided to AE. Any reputation cost which AE enjoys. Any reputation cost which AE enjoys. I'm still in less. Credit period, less credit period. If independent enterprise credit period is more than AE. Credit period, if independence entity's credit period is more than AE. Add credit period if AE's credit period is more than IE. Credit period if AE's credit period is more than IE. Any additional cost. Add any additional cost. All these things as a percentage you will work out to find out my ALP of GP. To find out my ALP of GP. I'm hoping that if at all you have any doubt, you can anytime clarify with me. If you want me to do an extra question or something like that apart from my material question, whichever I'm good, please send me the question. Okay, I'll keep adding it if at all there is a requirement. I don't think there is a requirement, but if at all you have one particular question which is challenging you, you can during the course of the day send me the question. Tomorrow's material I'll add it and do it. Whatever you have doubt, I'm always because I think Aishwarya was asking me a particular question which I thought I should work it out. But again, Aishwarya, if you're there or if you're listening to the video later, please send me the question. I will definitely include it. And
okay, sir.
Friend?
Okay, sir.
Yeah,
Thank you.
Thank you.
Okay, sir. We'll send it today.
Thank you, Aishwarya. Okay, question number 1. Aster Limited Australia holds 30% equity shares in Bhuvan Limited India. Bhuvan Limited develops software and also provides related support service. Bhuvan Limited during the year billed Aster Limited for 150 man-hours at the rate of 2,700 per man-hour. The total direct and indirect cost comes to 452. Bhuvan Limited billed Gaurav Limited at the rate of 3,800 per man-hour for the similar level of manpower and earned a gross profit of 40% on its cost. Remember, that is one highlighting factor always in the, okay, if they just give you 40%, it is on profit. If they give you 40% on cost, be careful. The transaction with Aster and Gaurav are comparable subject to the following. While Bhuvan Limited also derives technological support from Aster, there is no such support which is given by Gaurav Limited. The value of support may be taken as 15% of normal GP. So my associated enterprises is giving me technological support, so I will earn lesser only from him. I cannot earn the same profit. You give me software also I will charge you 40%. He will find another person and go. Okay. Aster gives business in large volume. A quantity discount of 10% is normal. In case of rendering service to Acer, Bhuvan neither runs risk nor incurs any marketing cost. On the other hand, in the case of Gaurav Limited, Bhuvan has to assume all the risk and associated market cost, which is 20%. Bhuvan Limited offered 1 month credit to Aster. The cost of providing such credit is 5%. No such credit is offered to Gaurav Limited. Compute ALP. First, the theoretical answer. Always remember, Aster Limited holds 30% of voting power in Bhuvan Limited. Okay. If another enterprises holds 26% or more of voting power, then they both become associated enterprises. Please write first why this is coming. Okay. In the case, Aster and Bhuvan are associated enterprises. Further, Aster is located in Australia. Hence, this is an international transaction. And the associated enterprise. Okay. Bhuvan Limited develops software and also provides, development and sale of software. Okay. Hence, cost plus method is the appropriate method. It is 15% of GP. No, don't. I cannot see the chat. Please unmute and ask. Is this correct? Is this correct? Okay. Are you understanding? Okay. Total direct and indirect cost. Total direct and indirect cost 4,52,000 and okay, gross profit 24% on cost, 24% on cost, estimated sale value, actual sale value. It says okay, 150 man hours at the rate of 2,700 per man hour. Okay. Okay. Therefore, increase in income, increase in income 155 480. Okay, I have asked you to write two notes. Note 1, where AO increases the income, assessee, okay, cannot claim exemption or expenditure against such increase. Okay, note 2, it is assumed assessee has not entered into APA or not falling under safe harbor rules. Please complete the solution with this so that our answer stands out. Okay, provided the examiner who is correcting knows the provision. Okay, it will be appreciated much higher. Okay, okay, right. Question number 2A. Trax and Co. is engaged in providing scientific research services to several non-resident clients. Such services are provided to Olive Incorporation, which guarantees 12% of loans of Trax. Examine whether TP provisions are attracted in this transaction. Yes. Okay. TP provisions will get attracted if transactions are between, also if international transactions are between associated enterprises. Section 92A specifies where one entity provides guarantee to the extent of 10% or more of the borrowing, then they become associated enterprise. In this case, okay, Olive Incorporation and Trax may I may I okay, take shorter notes. I'll assure you that I'll post the Excel. Excel, I can give it to you in this case. Not, don't ask me the Excel of main class. That is, PC sir will not accept that. But this case, I'll give you the Excel. Take shorter. Okay, anyhow, he's going to Excel. I will not write. Please don't do like that. Okay, online students also. Okay. Without prejudice to the answer 1 above, assuming the transfer pricing provisions are attracted in this case and the AO had made a primary adjustment of 3 crore 10 lakhs to the transfer pricing in the 21-22 wide order dated 31-3-23 and the same was accepted by Trax. What are all the consequent requirement as per the Income Tax Act and implication of non-compliance? Assume that the transaction is in Indian rupees and no amount has been repatriated till the year end. The 1 year marginal cost of State Bank of India is 9%. Okay, read it. I'll come to the answer. where the quantum of primary adjustment exceeds 1 crore, I need to do secondary adjustment. Okay, secondary adjustment. Repatriation has to be made within 90 days of assessment order. Repatriation has to be made within 90 days of assessment order. One more time I am repeating. If it is voluntary, suo moto, 90 days from the date of filing of returns, November 30th, from there 90 days. Okay, December, Jan, Feb. If it is on the basis of assessment order, 90 days from the date of assessment order. If it is on the basis of APA, 90 days from the date of APA, signing of APA. Okay, otherwise interest arises not from 91st day but from day one. Okay, the remedy available to the assessee is the assessee can opt for payment of additional income tax, which is 18 plus 12 plus 4%. April 30, May 31, June 29. Into 9 plus 3.5 into 12 months. Okay, so
சார் இந்த எக்ஸல் ஷேர் பண்ணிடுவீங்களா சார்?
I will share the Excel 100%. Whether you want to on a day-to-day basis also, I will share. Or if you want to me to complete after the 5 days also, I want to share. I will definitely share this Excel. This is not going to be held back by me. 100%.
தேங்க்யூ சார்.
அதுக்காக ஆன்சர்
தேங்க்யூ.
எழுதாம இருக்காதீங்க. கொஞ்சமாவது இதா ஈஸியா எழுதிங்க ப்ளீஸ்.
ஓகேங்க சார். ஐ மீன் ஆஃபீஸ் தட்ஸ் வை சார்.
ஓகே ஓகே ஓகே.
தேங்க்யூ தேங்க்யூ சார்.
ரெண்டுமே பே பண்ணோம் till 31st March 24 because you haven't made it. Once you pay this, next year interest will not come. Otherwise, next year also interest will come. Option எல்லா கொஸ்டின்லயும் இது ஒரு ஆப்ஷன். What are all the consequent requirements? So you should write everything. Yeah, somebody has unmuted.
Sir.
You can go on with the question.
Yes, sir. Sir, if the amount is not repatriated, from the day one, the interest will be calculated,
Yes.
sir.
Yes,
so, அப்படின்னா வந்து if it is from the assessment date na 30th November ல இருந்து வருமா சார்?
இல்ல கண்ணு.
Interest.
Date of assessment order is 31/3/23. Wide order dated 31/3/23. இது due to assessment. If it is suo moto தான் நவம்பர்ல இருந்து December 1st ல இருந்து வரும்.
ஓகே. இல்லனா assessment date ல இருந்து வரும். assessment order date ல இருந்து
வரும்.
Okay sir. Thank you sir.
Question number 3. STP Limited is an Indian company engaged in the manufacture of supreme quality cotton bedsheets. It has a total borrowing of 60 crores by way of loan. Fixed Limited of Canada imported 4 lakh bedsheets from STP for the resale in Canada at 2,200 per unit. STP has sold the same to other dealers at 2,300. STP received a bank guarantee on 1/4/23 for availing a cash credit limit of 9 crores for which Fixed Limited was the guarantor. The term of trade for other dealer was to make payment within 1 month from the date of sale of goods by STP, whereas to Fixed Limited the credit period allowed was 3 months from the date of sale. The cost of capital 12% per annum and the supply of goods is assumed to be uniform. You are required to determine whether STP Limited and Fixed Limited are associated. If yes, compute ALP of the transaction between them and the amount to be added to the income of STP, if any, by way of ALP adjustment. Assuming that the above adjustment of the TP has been made suo moto by STP in its return, what is the time limit for repatriation? What are all the implications if the excess money is not repatriated? Let's read it. Please read it. There is no 26% holding. There is no asset funding, but there is a guarantee. Okay. Total borrowing of STP Limited. It has a total borrowing of 60 crores. 60 crores. Okay. Guarantee provided by Fixed Limited. 9 crores. Percentage of guarantee provided. How much is that? Okay, 9 divided by 60 into 100 comes to 15%. Okay, okay, more than 10% of the borrowing is guaranteed. Hence, they become associated enterprises. Hence, they become associated enterprises. Okay, provisions of transfer pricing will be applicable. Provisions of transfer pricing will be applicable. Is the class clear? Is the class clear? Now I am going to read it. Fixed Limited Canada imported 4 lakh bedsheets from STP for the resale in Canada at 2000. STP sold similar goods to other Canada dealers at 2,300. So actually it is not, it is sale. We are selling. Fixed Limited Canada imported from STP. So we are talking from our, okay. I have sold it for 2,200 to Fix. Whereas if it is an independent party, I am selling it at 2,300. Okay, the terms of the credit with other leaders for the other dealers was to make payment within 1 month from the date of sales, whereas Fixed Limited enjoys a credit of 3 months from the date of sale. The cost of capital is 12% per annum. So 2 months extra they are enjoying, for which they have to compensate me. For which they have to compensate me. You are required to determine whether they are associated. Yes, computation of ALP. Okay, they are going to pay this 2,300 2 months later. They are going to pay it 2 months later. Correcta? Correcta? 12% on a COC. Five crore 84 lakhs increase in income. Thanks. Yeah, sure. Okay, move on, move on, move on. Raja. XYZ. See, looking at the question, we will find what is this P&L account and all. Let them give anything. They cannot ask anything other than ALP, 94B, NJA. Okay, so tell your confidence is superior than how bigger the question is. XYZ கேட்கறதுக்கு நல்லா தான் இருக்கும். XYZ Limited provides you the profit and loss account for the financial years 22-23 and 23-24. Gross profit, employee benefit expenses, interest paid to L&T Incorporation. So they are coming to that 94B. Okay. Depreciation, income tax, transfer to reserves. On 23rd June 2022, an Indian company borrowed 120 crores from L&T Incorporation, a company incorporated into country R. The said loan was repayable in 4 years. This loan is guaranteed by SAM Limited, a company incorporated in country Y. SAM holds 36% shares in XYZ Limited. Calculate the income under the head capital gains from the business or profession for the assessment year 24-25. Assuming the GP is calculated as per the provisions of income tax and depreciation is as per income tax law, give appropriate reasons for us working. Assume none of the companies are engaged in banking business. So they are coming directly to 94B. 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 Let me repeat to you 94B. So that this one question will solve it, everything of 94B. 94B says, other than for a banking company, financial companies, etc., the maximum interest that you can claim is either actual interest or 30% of earnings before interest, tax, depreciation, and amortization, EBI, TDA, whichever is less. Where this 30% is less, the difference can be carried forward and adjusted in the next 8 years in the year in which normal actual interest is less. This is the logic with which we are going to work it out, and it's a superb question. Okay, one question which makes you understand 94B and makes you confidence, because 94B is a repeated question in our examination. Later I'll start the working. Actual interest, the question says, is 562 lakhs. Okay. EBITDA is, my dear friends, okay, let me have the actual interest here. Okay, is gross profit, which is 20-30 lakhs less employee cost, which is 390 lakhs. Interest I will not deduct, depreciation I will not deduct, income tax I will not deduct, transfer to reserves I will not deduct. Okay, so okay, EBITDA is this much, 1640. Okay, 30% of EBITDA. Whichever is less can be claimed in financial year 22-23. So I would claim this much difference to be carried forward. Okay, 562 minus 492, 70 lakhs. Difference to be carried forward, 70 lakhs. Is the class clear? Is the class clear? Okay, quick, together we work. Quick, without wasting time. Together we work. In this case, okay, whichever is less can be claimed. So since actual interest is lesser, the last year carried forward can be now claimed. To what extent it can be claimed? However, the maximum should, okay, interest cannot exceed 4 crore 13 lakh 40,000, because then actual interest will again go high. Okay, so to this extent, I can claim 24,40,000 I can claim. Once more class, I have a carry forward of 70 lakhs. Can I claim the entire 70 lakhs? The answer is no. I cannot claim the entire 70 lakhs. If I claim the entire 70 lakhs, what happens is my actual interest will be now 4 crore 59 lakhs, whereas 30% of EBITDA is only 4. I can claim to the extent of 24,40,000. Okay. Okay. Therefore, total interest to be claimed in financial year 23-24 is this much. Okay. Interest to be carried forward further 70 lakhs minus 24,40,000. Hope you are all understanding this. Hope you are all understanding this. One question we are very clear, you will go very clear with 94B. Though I have one or two more questions, but generally I'm saying. Pakka clear? Pakka clear? Which part of it? No. Last year, even though I paid 5,62,000, I can only claim 4,92,000. So 70 lakhs I did not claim last year. I can claim it in the year in which my actual interest is less than EBA, which means I can claim. Okay, which means it is allowed as a deduction. Last year you have not allowed as a deduction. This year you like MAT credit. GST input credit. Here. Paka? Okay, right? Question number 5. Friends, very slowly, let's read the question. As the question goes by, we'll read it twice, thrice, and answer it in one take. On 1/4/23, Focus Limited, an Indian company, borrowed 50 crores at 99.5% from Max Incorporation, a US entity, thereby increasing its total borrowings to 65 crores. The said loan is guaranteed by HIC Incorporation, another US entity. The place of effective management of both Max Incorporation and HIC is in US. The book value of total assets of Focus Limited is 180 crores. Focus Limited imported turbo equipment worth 30 crores from HIC Incorporation. Import duty of 4.50 crores on the same was paid by Focus Limited. The equipment was sold to T Limited, an unrelated party, for 40 crores. Normal GP margin for Focus Limited in similar uncontrolled transaction is 20%. Net profit of Focus Limited was 8 crores after debiting interest of 5 crores, out of which 1.25 is for local borrowing, which means 4.75 is for the other one, depreciation and income tax. Based on the above facts of the case law scenario, choose the most appropriate answer. The first question is, what is the amount of interest to be allowed in computation of total income if assessment there is an interest expenditure disallowed to the extent of 4 crores? Disallowed to the extent of 4 crores. My dear friends, this year my net profit is 8 crores after debiting 6, 2.5, 1.5. Okay. In exam, you will not take so much time. You will do it as a rough calculation, but here I am little, though I am also working on a rough basis, but little wherever needed. Okay. Profit is 8 crores. They are absolute values only they are working. And interest is 6 crores. Okay. 6 crores. Depreciation is 2 crore 50 lakhs. Okay. Income taxes 1 crore 50 lakhs. Okay. After debiting 6 crores, etc. In examination, we'll always have a doubt. Should I add back 4.75 or 6 crores? Because 4. We should EBITDA. They never said EBI of foreign company. They said EBI. Depreciation is also Indian. Tax is also Indian. Interest alone, we will have the doubt. In exam, normally we will have that doubt. EBITDA. 18 crores. Okay. So, actual interest. Now I understand it is 4.25 crores. Okay. 30% of EBI TDA. So this into 30%. Okay. Okay. Whichever is less. So minimum of these two things. So since actual is lesser, okay, brought forward credit. Brought forward credit, how much is there? Okay, 4 crores is there. Brought forward credit, 4 crores is there, but you cannot claim the entire 4 crores. You can claim to the extent of the difference, that is 1 crore 15 lakhs. So I can claim an interest of 5 crore 40 lakhs. I can there was an interest disallowed to the extent of. Okay, sorry, friends. What is the interest? 6 crores to be allowed. Add again that whatever is the disallowed, sorry, 425, okay, plus interest of local interest, sorry, local interest, 1 crore 25 lakhs, 1 crore 25 lakhs, 665 you can claim, 665 you can claim, okay. I forgot the local interest. 665 you can claim. 30% plus okay, ABI TDA. So brought forward 115 you can claim. So totally 6 crore 65 you can claim. Hmm. 4? 4 crore 75. Then the difference is 65. Sorry, the difference is 65. 665 is right, but the difference carry forward is different. Clear? Last year, the same, which we worked out. In 22-23, I'm disallowing 70 lakhs. This year brought forward and claim the whatever is the differential portion. Shall I? Okay. The TP adjustment for arm's length price for purchase price is to be made in the computation of total income. Okay, right. 3 lakh, no adjustment since transfer cannot result in reduction of income. Okay, right. Let us check that. Let us check that. Focus Limited imported from Turbo Limited goods worth 30 crores from HIK Incorporation. Import duty 4.5 crore on the same was paid by Focus Limited. So my cost comes to 34,550. The equipment was sold to an unrelated party for 40 crores. The normal for GP margin is similar, is 20%. So what happens is, okay, question 2, okay, question 2, my dear friends, okay, sale value, how much is the sale value? Okay, 40 crores. 40 crores less normal GP at 20%. So import price to be 40 minus 8, 32 crores. Actual import price, actually you can also reduce post importation cost, import duty of 4.5 crores. Or anywhere you can reduce it. Anyhow, it's less import duty 4.5 crores. Okay, actual import price 40 minus 8 minus 4.5. ALP, actual import price is 30 crores. So my adjustment will be to the extent of 2 crore 50 lakhs. My adjustment, see friends, 40 crores is my sell. Normal GP. Anyway, you can do. You can add 30 plus 4.5, 34.5 and compare any manner, because it is, you need not work out and show. It is just you can do like this. Hopefully 2.5 crores. 2.5 crores. If Focus Limited repatriated the excess money on 31/3/25, what will be the interest income that would be added to the total income if SBI's 1-year marginal rate is 11.25 and 10.25 on 1/4/25? Assume that Focus Limited suo moto made the primary adjustment in the books on 30/11/24. 30/11/24. Question 3. Okay. Total adjustment exceeds 1 crore. Correct? 2 crore 50 lakhs. Total adjustment exceeds 1 crore. Okay. Repatriation not made within 9 months. Interest from 1st December. 2 crore 50 lakhs into, okay, 11.25 plus 3.5 percentage into 4/12. Okay, 2 crore 50 lakhs into 14.75 percentage into 4/12. 112.29. They are worked out on days basis. But 10.25. Sorry, friends. Not on 1st April, right? This is now we are computing. 13.75. This answer alone, please wait. I'll give you the answer. I'll just find out their working and give you the answer. I'll just find out their working and give you the answer. Please give me, tomorrow morning, I'll give you the answer for this. Okay. Tomorrow morning, I'll give you the answer for this. If Focus decides not to repatriate the excess money, instead pay additional income tax, then what would be the additional income tax? Question number 4, additional income tax. 250 into 18%, this into 12%, this plus this into 4%. 5241,600. 5241,600. 5241,600. If Focus Limited decides to pay additional income tax on the entire excess on 15/3/25, should interest be calculated and added to its total income? Yes. Yes, you need to add it. Yes, you need to add it. If so, what is the amount? Assume SBI rate. Okay. This along with that answer, this answer also I will do it. The answer is yes. Yes, you need to add it. If they have decided to pay before 28th Feb, that's different. Since it has exceeded the 90 days, they have to definitely charge the interest. I'll give you. In addition to the facts given in the scenario above, assume that on 23/8/23, Focus Limited has entered into an agreement for sale of turbo equipment with Y Limited, an Indian company not related to Focus Limited. Okay. Y Limited has already entered into an agreement for the sale of the same with Kite Incorporation, unrelated to Y, and UK entity whose place of effective management is Focus Limited holds 28% shares in. This is known as deemed international transaction. This is known as deemed international transaction. What they do, I transfer it to, okay, who's that first party? Okay, Focus Limited has entered into, okay, with Y Limited. Focus transfers to Y. Y transfers to unrelated Kite. Okay, they are not related, but these people are related. These two are related. So the in-between party is used as a means of transfer to avoid transfer. With which of the following enterprises would a transaction with Focus Limited be considered as international transaction? Hike Limited and Kite Limited, Max Incorporation and Kite Limited, Hike, Kite and Y Limited, Max, where's Max coming in here? Oh, okay. That you need not worry. Okay. Okay. The C is the answer. Hike, Kite and Y Limited is the answer, because with them only there is an international, deemed international transaction. Only C is the answer. Sir, Focus Limited entered into an agreement with Y Limited. They are unrelated party. They are not related to Focus Limited. Why? So there is no transfer. That is not coming under TP. Y Limited in turn sales to X Limited, Kite Limited, which is not an associated property, no TP. But when I look into the transaction, these two are associated enterprise. Why am I using Y as a route? To avoid transfer pricing regulation. So deemed international transaction. I need to give you two answers. I'll give you. TI Limited, the assessee, has sold goods on 12/1/24 to LMP Limited, located in a NJA, for 9.50 crores during the current financial year. TI Limited charged 10.5 crores to Top Incorporation of Country X and 11 crores to MON Incorporation of Country Y for sale of identical goods, both of which are neither associated enterprises nor they are situated in NJA. While sales to Top and MON were on CIF basis, the sale to LMP was on FOB basis. Freight and insurance 20 lakhs on purchase from TI Limited was incurred. If sales to Top and Moon were made on FOB, the cost of freight insurance would have been 18 lakhs. The assessee has a policy of providing after-sales support service to the tune of 13 lakhs to all customers except LMP, which procured the same locally at a cost of 17 lakhs. Compute the ALP and the sales made to LMP and the amount of consequent increase, if any, in the profits. Read through. Okay. LMP is located in notified jurisdictional area. LMP is located in a NJA, notified jurisdictional area. Hence, irrespective of other informations, LMP is a associated enterprises of TI Limited Okay, so less freight and insurance, because to my LMP I am sending only at FOB, whereas for the other two parties I have sent it at CIF. They are going to incur freight and insurance to the extent of 20 lakhs. Okay, the assessee has a policy of providing, okay, services to the tune of 13 lakhs to all customers except LMP who's procured them same locally. Okay, friends, where there are more than one ALP, where there are more, please listen now. I'm just telling you something which I have not told in the classroom. Where there are more than one ALP, normally the highest will be preferred if it is located in NJA. But in the recent amendment, in the amended material, I found that even in this case, the arithmetical mean should be taken. Even in this case, the arithmetical mean should be taken and it should not be considered as highest. Okay, so arithmetical mean, okay, 10.17 plus 10.67 divided by 2, 10.42. Actual export price 9.50. Hence, income increases by. Please make this change alone. In our working, we have done whichever is highest. In Haji Mullah, two questions we have worked like this. One, export of bananas to a country where we took the highest. Okay, in both the cases, we need to change our answer to, because this is the latest amendment which while preparing this material, I came to understand that only the arithmetical mean should be taken, even in the case of NJA. Even in the case of NJA. Please make the changes. What is the freight and insurance you will reduce is whatever is incurred by the other party. Suppose from you I am importing, from him I am importing or export. From to you I'll export, to him I'll export. You are located in an NJA. You are incurring a freight of 2 lakhs. Your price should be reduced only by 2 lakhs. He is incurring a freight of 3 lakhs. Will I reduce 3 lakhs for you or 2 lakhs? 2 lakhs. That's what. Whatever is the freight and incurred by LMP should only be reduced, not the prior freight incurred by the respective other third parties. Answer. Unless asked for, it is, and 1 crore increase allowed, 92. Don't worry about secondary. B Limited is an Indian company located in SEZ, in which TQR Incorporation, a company C, holding 30% shares, had voting power. Following transactions were entered into between the two companies during the year 23-24. B sold 90,000 pieces of LED sticks at $10 per LED stick to TQR Incorporation. Identical were sold by B to an unrelated party at 12. So 2 rupees I will increase. This is TNMM, transaction net margin method. Straightforward question. B Limited borrowed 3 crore 50 lakhs from country C lender on the strength of guarantee given by TQR Incorporation. And for the purpose of guarantee, B Limited paid 15,000 as guarantee fee to TQR. However, for the same amount of loan taken by an unrelated party, it only paid 12,000. B Limited paid $18,000 to TQR Incorporation for getting the details of various potential customers to improve its business. The same was provided at 16,000. Examine the relationship between B Limited and TQR Incorporation of country C and the nature of various transactions entered into by them for the financial year 23-24. TQR Incorporation holds 30% equity voting power. So they have not asked us to compute income because they have not given profit and all. Every transaction and the nature of various transaction. Okay. Case A. Okay. If B Limited sold 90,000 pieces of LED sticks at 10 to TQR, identical units are sold at 12. Okay. B Limited income needs to be increased by, have they given the exchange rate? What are all the adjustment, if any, required to be made in the total income under transfer pricing provisions? One country dollar is taken as 85. If the said adjustment are made by the AO, can the SC claim 10 away? So, okay. B Limited needs to increase the by how much? 90,000 pieces into 10. Okay. $2 into 85 per dollar. case B, okay, a lender paid 15,000 as guarantee fee, okay, additional guarantee fee paid 3,000 into 85. If you are borrowed a loan to from country C, lender on the strength of guarantee given by, for the purpose of giving pay 15,000 as guarantee fees, whereas to an unrelated, however, the same amount taken by an unrelated India, TQR charged 12,000. B Limited paid $18,000 for getting details of various potential customers. So I would provide it for 60,000. Am I clear? Am I clear? Okay. Shall I move on? Got it? If the said adjustment is done by the assessing officer, no, you know, okay. Part 3, where adjustments are made by AO, then assessing is not eligible to claim 10. X Limited, an Indian company, supplies 50,000 product to Y Limited, a German company, and which is associated at FOB of 4,000 after discount of 200 per product. It also supplies 5,000 products to Z Limited, which is not associated, at a CIF of 5,800, including warranty charges of 300 per product. Insurance and freight are 600. Profit disclosed by X Limited is 8 crores. Calculate reasonable profit of X Limited by applying ALP if X Limited is not covered by 10AA. So, okay. Supply to an independent party 5,800. 5,800 supply to an independent. It supplies 5,000 products, okay, which is, okay, including warranty. This is at CIF. This is at CIF. Whereas to the other party, I am supplying only at FOB. So insurance and freight needs to be deducted. Minus insurance and freight, 600, 5,200. Okay. And then there is a warranty charges of 300 rupees. Okay. Which I am not providing in the case of, which they have not given in the case of. Minus warranty 300, 4,900, minus there is a quantity discount I need to give for them, 200. So 4,700 should be my price, but I have only supplied it at 4,000. I have only supplied it at 4,000. Okay, so 700 per unit into number of units. Okay, supplied 50,000 products. So 700 into 50,000, okay, should be added to the income. 700 into 50,000 should be added to the income. So I'm just saying 700 into 50,000 should be, so 3 crore 50 lakhs. So their profit disclosed is 8 crores. What is the reasonable profit? 8 plus 3.50. Okay, 11 crore 50 lakhs is the reasonable profit. 11 crore 50 lakhs is the reasonable profit. Okay, okay. X Limited, an Indian company, borrowed 50 crores from Y Limited, an American company, at interest 8%. X Limited submits the following: net profit before, after interest, income tax, depreciation and dividend 5 crores. Income tax 1.5, depreciation, dividend. Compute taxable profit of X Limited. If the book value of assets is 98 crores, does it make any difference if it is 99 crores? Okay, right. Book value of assets. How much is that? 98 crores. Loan obtained. Loan obtained. Example, borrowed 50 crores. Okay, 51% or more of the asset is funded by other company. So they are associated. 51% of the assets is funded by another company. So they become associated. Are you clear? 51% is funded. Okay. So now the interest, okay, EBITDA will be, okay, 5 plus 1.5, 5 plus 1.5 plus 1 plus 0.5 plus, how much is the interest? Interest is 50 crore at an interest rate of 8% per annum. So interest will be into 8%, 4 crores. 4 crores. Okay, repeating, 5 plus 1.5 plus 1 plus 0.5 plus 4. Okay, 12 crores. Okay, 12 crores. And 30% of EBITDA is this much. Okay, 3.60. This can only be, so another 40 lakhs you cannot claim. You can only claim 3 crore 60 lakhs. You can only claim 3 crore 60 lakhs. So 40 needs to be added. Okay, X Limited submits net profit. Okay, depreciation. Compute taxable profits of X Limited. What will happen is net profit after income tax. So 5 crores. Income tax will not be allowed, 1.5 crores. Dividend will not be allowed 5 crores, 0.5 crores plus interest of 0.40 crores, 0.40 crores. So 6.5, 7, 7.4 will be the profit, taxable profit. Once more repeating, if you want, I will repeat again. Okay, profit. Okay, profit. As of now, the profit is 5 crores. Add, okay, add income tax, okay, 1.5. I'll do the numbering, that is digitalization. Depreciation 1, dividend, digits I'll add it, don't worry, 0.5, excess interest 0.4, okay. Okay, so the revised profit will be, 8.4. 8.4. Excess interest is, this is how I have find out, 4 crores as against 3.6. And even if the book value of asset is 99 lakhs, it will not change. If the book value of the asset is more than 1 crore only, it will change. Am I clear? Okay. So friends, these 8 questions are more than sufficient. Just go through this. If at all you want to touch the material, go for the documentation and TPO reference, but rarely it is being asked. But remember, 94B is repeatedly asked, and ALP can be asked. Very rarely NJA can also be asked. Okay, this is with regard to our TP. We end the class today here. Tomorrow morning, I'm going to start with non-resident taxation, followed by DTAA, followed by advance ruling, and if time permits, some GAR provisions we will see, by which our international taxation will be over. Wednesday, company, we'll do assessment of company. Some 3 questions on assessment. Everything will be 1 hour question. So that 3 questions of assessment of company. Okay, meet you tomorrow. And if you have any feedback, you can just text me. If you have any feedback, the feedback can be that I am doing more questions. You reduce the question, I'm ready to reduce. Don't give me the feedback, increase the question. It is very difficult to increase. Okay, but if you have any specific question, you can put it on me. Okay, the feedback can be anything. I am ready to take it. All the best, friends.